You are listening to Keystone's Stock Talk Show, episode 322. It's great to chat with you again for our first show of 2026. So my intro is short and sweet. This week we review our 2025 predictions and launch into our always popular 2026 predictions. All right, let's get to the show. I welcome my co-host, the Killer Bees, Brennan, and a new contributor, Rahil Gilani, who will be making his inaugural predictions. And as I understand, according to our poll, he is already rated higher than us. So, in terms of his predictive ability. So he, no pressure, but we'll get to those. We're going to save his predictions right for the end, so people will actually watch right to the end. That's the way we do it. That's the way you do a teaser in the business, I've heard. How are you guys doing? Happy New Year. We're heading into a new year.
Yes.
Oh, and one of the most exciting things is I literally, as I was walking in here, I took delivery of new mugs. This one's still got water mug, isn't it? Yeah, that is a big mug.
Your head.
Yeah, look at that. I can't even look. He's on the other. Oh, that's a beautiful couple charts or fake charts or whatever they are. But that looks good. That's a great mug. So we'll be giving those away, people, during the year. If you send in your questions, your stock, our take. We got a ton of them now. So send those questions in. We'll pick a great question every week, and we'll start to give away more mugs. Anybody coming to see us at the World Outlook this year in February? What is that? The 6th and 7th? 6th, 7. So. Oh God. Anyways, it's 6th, 7th. We will give away some to clients there as well. And if you want to come and see myself and Brennan in Las Vegas, we will be at the Money Show. I think in the link to when we send out this podcast, there'll be a link to get a hotel room and stay with Brennan in his room at the event. That's the perks. You get to stay and bunk with Brennan at the Money Show in Las Vegas. That's what everybody wants. Actually, people pay not to stay anywhere near us.
I prefer it that way. Actually,
it's good. Okay, well, I know. I don't know. I was going to say anything new heading into New Year for anybody.
Not really.
Nothing new.
You guys are.
This makes for some good airtime, eh?
Yeah, you guys are awesome. All right, so I just noticed something on my desk that I can't show that somebody got me for Christmas, and I'm gonna lose it. But anyway, okay. Let's just say that Brennan has a little segment on his segment on scams from last week. You wanted to share with us. And then you're going to go into the poll question. Is that correct?
I mean, I'll get Brett to go into the poll question.
Oh, that is a nice suit, Detective Brennan, on you there.
I just thought that as a team, we would just look at, we ended up posting. We pulled out the segment from the podcast and then posted as an individual segment on our YouTube, how to identify an investing scam. Last week, I went through, a bunch of scams that I just keep getting berated with online. But of course, I just thought it was funny, on this, how to identify an investing scam YouTube post that we made. Of course, another scam started posting all over it, basically trying to pump this initial coin offering called Keystone. There's a bunch of, fake accounts. I deleted all of the YouTube comments. But there was dozens and dozens of comments. And I just thought it was kind of ironic and funny that you just really can't get away from those financial scams or pump and dumps online. So just going into 2026, be very careful. Be very careful. AI is getting good too. So.
I think you said you were berated with those. I don't think they were berating you in there. I think you mean inundated, right? Is that what you're trying to say?
Sure.
I'm such an idiot. That's all I hear. But that's awesome. Yeah, I know it is crazy. You do a segment on scams, and a bunch of scams appear under that. It's pretty poetic.
Yes.
All right. Poll question.
Yeah,
I like this one. It's beautiful, right?
It is perfect.
I know.
Yeah, no, it shows just how great our predictions have been previously. So our poll is just simply, just to do with this episode, Keystone's annual prediction show is this episode. Whose predictions will perform the best in 2026? 29% of our viewers said Ryan, 14% coming in at last, Brennan. I came in at 24%.
Poor Brennan. It's not even true.
And then Rahil, who said, I think, 3 words so far, which is perfect, came in first at 33%, already outperforming us after us doing this for years.
Mm-hmm. Yes. And we got to say that our predictions are in no way a reflection on our research and recommendations. We don't really make recommendations. Although I'm going to tease, I think Brennan is making a recommendation on a stock that is in coverage. So stay tuned if you're looking for a stock that we like in coverage, because Brennan's making prediction on that. I'm actually going to tease one as well. I'm going to tease. I'm going to be a little bit of a tease to start 2026. Yeah. So
I ended up voting for
ones now.
I ended up voting for Brett this year because, I mean, statistically, Brett's been doing pretty good every single year. I don't blame everybody for not voting for me. I've done horribly, every year. So, statistically speaking, if the history is an indicator, they're right on the money.
It's the trend line that you're following, right? So, yeah.
Yes.
Yeah. Well, yeah, I didn't even know there was a poll, so I didn't vote. But if I would have voted, I would have voted for other if I could. But there was no other. So, all right. We have some preamble, but to be honest, I think people just want us to get into the predictions. So you guys have nothing else to say. I can tell by your faces. So let's just get me to share my screen, and I'm going to review. We're going to first review our predictions from 2025. I will do it. Brennan will do it. Brett will do his, and then we will get into our predictions. We'll go in the same order, and we'll add what everybody's waiting for, Rahil's predictions for 2026 at the end. Okay, so this is our 2026 prediction show. I am going to look into, start off with my 2025 predictions and see how well I did. The guys will rate whether or not I hit a winner or a loser on these predictions. So prediction number 1 was stubbornly high inflation does not end below 2% in 2025. The specific prediction here really is around the fact that the PCE price index, the Fed's preferred inflation gauge, which is currently at 2.4, was currently at the time at 2.4, will end above 2% in 2025. As we can see here, now the Fed seeks to achieve inflation at the rate of 2% over the long term. It actually dropped in April to around 220, I think was the level at that point. But it has spiked up over the course of this year stubbornly to the 2.8 level here. So we can go back to my predictions here. What do we think here? The result is 2.8. Are we giving me a win?
Yeah. You got a win.
Woo! Somehow I already predicted that or something. So the slides, the AI came in with that at the end and told us that, yes, I had got a winner chicken dinner. All right, so I'm 1 for 1. Prediction number 2 here was the new capital gains proposal dies in 2026. The specific prediction here, the Liberals' proposed new capital gains tax will basically either die as legislation not be passed or repealed in 2025. So here is the official release on March 21st. We can see there quoting the Right Honorable Mark Carney saying Canada is a country of builders. Canceling the hike in capital gains tax will catalyze investments across the country or across our communities and incentivizes builders, innovators, and entrepreneurs to grow their businesses in Canada, creating more higher paying jobs. It's time to build one Canadian economy, the strongest in the G7. I'm not sure what changed over the course of the year, but suddenly that was the spin that we will cancel that. And It looks like the result, Liberals officially cancel new capital gains proposed tax in March. So what are we giving me on this?
2 for 2.
2 for 2.
Just
Winner, chicken
dinner.
dinner. Again, I'm just going to keep saying that. All right. So prediction number 3 here. The information technology continues to outperform the S&P 500 in 2025. So the specific prediction here was the S&P 500 Information Technology Index will end higher than the S&P 500 index in 2025. Well, we can see here, that's prediction number 3. The result was that the S&P 500 was up almost 18% last year, but the S&P 500 Information Technology was 23.6%. It wasn't a smashing beat, but it was a beat nonetheless. I think a lot of that might have been powered by Alphabet over the course of this last year, although that would be in the S&P 500 as well. But I'm going to say it's a winner. I think you guys would agree. So
Winner,
3 for 3. Dinner. I am loving this year's predictions. And Trump's, okay, so the drill helps energy service stocks more than energy producers. There was many reasons I thought this. Now, the specific prediction that we used, or I would use as the benchmark, was the Fidelity Select Portfolio's energy service portfolio. That will outperform the iShares US Oil and Gas Exploration and Production ETF. Well, we can see here the result that did actually occur. I'm not sure if it had anything at all to do with the Trump drill, baby, drill slogan. To be honest, like lower oil and gas prices. Like if there's higher, the theory was lower oil and gas prices would come from more drilling. With more drilling, you're going to see more money enter into the service companies. But I mean, in this case, I think there's money drying up for the service companies. So it just happened that they outperformed over the course of this year. I don't know. I'm going to give myself a winner, and I'm going to say 4 for 4, baby.
That's fair.
Amazing.
We'll give it to you.
These are my additional predictions, which are amazing. And I think all of these came true as well. Clearly, Mr. Beast, I believe, was offered a cabinet position. I think he just declined that. Barron Trump was offered a position as a key advisor. He may have accepted that, but he did try a stint, I believe, as an NBA power forward. I'm just not watching the NBA this year, but I'm going to assume that happened. Trudeau will resign in 2025. You
got one.
That was cool. I mean, these are joke predictions, basically, and that one comes through. And then Trudeau will face scandal, likely involving SpongeBob. Well, I mean, as we can see here, I think that's at least 2 for 4 on those predictions as well. So I'm going to end my review of my predictions from this past year, but now we're going to go into Brennan's predictions from this past year. But I will be back with some bold new predictions for 2026.
SpongeBob is looking pretty good.
I will learn. I should have. SpongeBob is looking hot these days. That's all I can say. Wow. All right. Brennan loves
SpongeBob. Should we start
SpongeBob.
calling Ryan Sir Ryan going forward because of his predictions?
As soon as you do that, all predictions from this year are wrong. So that's, predictions. I think, was it Howard Marks? I think or something said predictions are for losers. And so I'm a winner, but a loser by even making those predictions over the course of this year. So, and I agree with that. Okay, let's move on. Brennan, how'd you do?
Not very good.
Oh. Sorry.
No, it actually wasn't that bad. But number one was really wrong. So number one, I predicted that Pierre Poilievre's Conservative Party was going to see a massive landslide victory in Canada's 2025 federal election and will win.
Not in our Canada. No.
Exactly.
Right.
Exactly. Not in our Canada. So, essentially polls were signaling that, Pierre was going to win, especially considering at that time, Trudeau had stepped down from the leader of the Liberal Party due to pressure. But as Trump's rhetoric of Canada becoming the 51st state ramped up, with many Canadians believing Poilievre was Trump light, Mark Carney was able to capitalize and flip the script pretty quickly. So, I was definitely wrong here. I also did say that, foreign direct investment would remain above 15 billion per quarter on average in 2025, which was right. But regardless, I would say that, the underlying thesis of the prediction was wrong. So what do you guys say?
Yeah, you just can't listen to the polls.
Yeah.
Apparently,
Well,
right?
and
Yeah.
here's something
I
as
had.
well. Like I watched like a really cool, video going over, just what parties were in power over, since Canada was formed and started. 75% of the time, the Liberals have been in power. I did not know that. That is a crazy statistic to me.
Yeah.
Anyways, that
Well,
was news for me this last year.
I think my prediction there that the capital gains tax getting scrapped, I think that helped. Taking that out of the equation, and there were a number of policies that were kind of borrowed over from, and the Liberals are branded as less scary. So
Definitely.
there's your landslide victory that you looked at this time on Brennan's prediction.
Yeah, look at it. It's crazy.
became not so much a landslide.
No.
Yeah, the block had more apparently seats at that point than that you should have predicted, right? Yeah. So
Yeah.
the block will not. All right. Anyways.
Okay. So my second one, this was quite a softball, but I predicted that if Trump can end the Russia-Ukraine war, it will take much longer than the 24 hours that he announced, and it will not end until the second half of 2025 if he can, in fact, broker a deal. And of course, I was right. The war is still, unfortunately, pushing on. And, I was correct in my thinking that Putin will be tough at the negotiating table as his army continues to push forward, grind forward on the front lines. And, Ukraine's not going to be, quick to roll over given, Putin's disregard for past ceasefire agreements. I think that, Trump thought that at the beginning, he thought that, Putin would come to the negotiating table and it'd be, easy and quick, I think. But, that is not the Putin which I foresaw, which again, low hanging fruit, but
yeah,
winner chicken.
I mean, there are softball questions. This was more of a t-ball question, so can I just sit in there, if we call it that? A t-ball prediction is what I mean. But yeah, now we're gonna give it to you, Brennan. Clearly, you need it, right?
So I am 1 for 2. Let's finish strong here. So my third is I predicted that MicroStrategy, or now just called Strategy, MSTR is the ticker, will end the year below its then current trading range of $380 per share, which was essentially a bet against Bitcoin for the year after its tremendous 2024, where it was up 125%, as well as the reduction of MicroStrategies or Strategy's equity value premium to its Bitcoin net asset value. And the prediction started the year off strong, but flipped during the summer as Bitcoin rallied. However, ending the year, the prediction is well in the money with MSTR down 58%. So,
see, this is a good prediction. Nice job on that one.
Yeah. Thank you. But like, here's the thing: is I put a little bit of gambling money towards it. I mean, we've talked about it on the podcast before. Used a levered ETF.
I don't know if we want to hear this part of the story though.
Well, people have already heard it on the podcast, so
yeah,
they're just hearing it again. But it was a real, not learning because I understood, volatility decay, but just because you can be right on the direction of an investment, but if you're using a 3 times levered ETF or something along those lines, your return will not match, exactly what happened here. If I probably held the position continually over time, I probably still would have, lost, or I would have lost money probably. But anyways, that's just another thing to note.
I mean, that's a great learning and teaching moment right there, to be honest, right now. Like you can be absolutely right in the direction which you were here and still lose money on some of those investment vehicles. So
exactly.
And Brett's been hammering that home. Hopefully to our clients.
2x leveraged ETFs inverse or normal. Like Brennan is correct here. I forget the exact date when you did your short, but it was. I think they've split the ETF a couple times since then because it has declined so much in value. Yeah. It was around $36 or something like that, and it's around $14.50 now. Even though the underlying microstrategies went down.
Yeah, you're
I'm just going to keep on
absolutely
hitting
right.
that point home.
Absolutely right. You would have lost money if you held on.
Even though your direction was correct.
Yes,
Exactly.
absolutely
So
correct.
again, people using those.
And it's not like you were right by 10%. I think it's a 58% decline, right? We're talking,
so 58%
showing
decline,
you how right you were,
Yeah.
and yet you would have lost money on one of those investment vehicles. I mean, that's maybe a case to pound home in another episode. But we can do that this year, I'm sure. We'll get asked about them. I guarantee it.
And
I mean, I as an aside, like I went to a dinner with some financial professionals earlier this fall, and they were talking about this and how basically you couldn't lose on these. You're making it. They didn't fundamentally understand them, and these are financial professionals. So it's kind of eye opening when you see that.
100%. And I mean, you guys think that this was a T-ball or a softball. I don't think it was a very softball, but Brennan gets a girlfriend in 2025. And Ryan will stop bugging him about it.
Stop bugging you is
that's
not a
true.
good prediction at all. That's not going to happen. We still have not had proof of life in person, so
this
we
is
don't know.
True. She'll be in Vancouver for the World Outlook, so
we will get it at some point.
Yeah. Yes,
probably.
So full point, half point. I mean, Ryan's still been bugging me about it, but
it's true.
For sure. We'll get, well, I mean, we can get, it's a half point to maybe be a full point when we see in person, but it might drop, you never, not based on her. It's just, there's a question of whether or not she dumps you by then. And there's a question of whether or not she comes to her senses, right? And then does that, or, she's actually just a bot that you've created. So those are the things. Yeah.
Okay. And that is
not bad, Brennan. It wasn't bad.
Yeah. No, it wasn't that bad. Basically, 3 out of 4. But again, the Trump one and the Russia-Ukraine war. It's just that was in the headlines. At the time, everybody was talking, or Trump was talking about, how quick he'll end the war. But yeah, that was a pretty bad one on my part. But
amazing.
All right,
we're getting to Brett.
Yeah, the back winner.
Yes.
Just gonna point that out because you guys did better than me this year. So first prediction was which was the Canadian dollar will appreciate against the US dollar, because at the time everyone was quite panicked around the Canadian dollar. The rhetoric online, especially from retail investors, I was seeing the Canadian dollar was screwed. It was going to dramatically decrease against the US dollar, even though this was post-election with Trump, and he is constantly went on about wanting actually a weaker US dollar. And Trump, whether or not he was the impact here, he got what he wanted, at least to a degree, as the Canadian dollar against the US dollar. And the US dollar as a whole against most currencies did actually decline this year. But the Canadian dollar, it was $1.43.5 last year, and now it's at $1.38.7. So that one is correct. That is one correct so far.
Yep.
Yeah, and I that's a great prediction, to be honest, because there was a lot talking other direction, right? And it's funny because I just had I think it was client or potential client. I had a phone call just last week, and recommended to put their US dollars figures into the market because the US dollar is going lower, and it's a cautionary tale on what we make our investment decisions based on, and it's harder to control that than it is to just get the individual companies you put in your portfolio correct. Do not worry as much about currency fluctuations, because you look back at a chart on Canada versus US 10 years, it'll fluctuate, but it tends to be 10 years back. If you have a 5% move, that's typically average. And if you didn't invest in, say, a US company because you thought, the currency is going to go lower, often you're putting your portfolio at a disadvantage, because you can find, if you find a great company, whether it's in the US and Canada, typically your 5% move over 5-10 years in the currency means nothing if the stock is up 200-300% over that period, or even if it's up 50%, right? And the breadth of companies in the US. I always use this as an example. This is kind of an aside, but I use this as an example all the time. about 8 years ago, we wanted to invest in cybersecurity. We did a sweep of the Canadian market. There's about 5 companies, all of them, none of them were profitable. So we couldn't even gain exposure there. We did the same in the US. There was about 58 companies. Chose one that was Fortinet. It's gone from $9 to $80. We wouldn't even have gained exposure to cybersecurity through a profitable business if we just focused on the Canadian market. Because we don't limit ourselves to the Canadian market, and we will invest in a U.S. company despite where the currency is going. You had exposure to a sector that we wanted to have exposure to, and you made tremendous gains. The currency could have been cut by 30% in favor, in your detriment, and you would have made tremendous gains on that. So, and that's obviously not what happened in terms of the currency. But
yeah, and I would say that really goes for any major currency as well, not just US dollars. Is if you want exposure, especially to in the US, it's obviously tech, but even if you want a specific company and it's traded in euros, likely if it's a major currency, the impact of you selecting a strong individual company could likely outweigh the currency effect.
Yeah.
Unless the currency has an extreme event.
Yeah.
That can happen, but it's not exactly likely when you're coming to these major currencies.
Yeah.
So my next prediction. This one completely wrong. And this is what I was saying at the time. This would be it was a psychological short of Palantir, PLTR, saying it would close lower. Obviously completely wrong, but this really comes down to the point is the classic, the market can remain irrational longer than you can remain solvent. That's why I would not actually short any meme stock or one of these super high valuations. It's around 100 times sales, not earnings. That is off of revenue. That is an extreme valuation. Would I still say the company is extremely overvalued? Yes. Do I think that anything is fundamentally changed to support even last year's valuation? No, still extremely valued, but obviously wrong in a prediction. Very, very wrong. Would not want to short anything like this.
Yeah, it's 245 times forward adjusted earnings right now. And this. So I mean, it's the case of do you want a portfolio composed of companies like these, or it's not like these. Palantir is a great company, good revenues. We're saying, is it valued at a place where we have any degree of safety, margin of safety in the business? Yeah. If you're going to fill your portfolios with forward-looking Ps at 250, everything has to go right for those companies to continue to go higher. I'd rather find a high-quality company that traded at a reasonable valuation. It doesn't have to be the cheapest company out there. Reasonable with growth, a good balance sheet, and fill your portfolio with that. You have a better chance of beating the market over the long term versus chasing companies that, if Palantir turns out to be a unicorn and continues to grow, like say an Amazon, which always traded at a high PE and was able to do that, the likelihood of finding that versus just finding good companies that have tremendous returns over the long term that trade at reasonable prices, I would stay in that box. And that's the box that we would play in. And you have to be disciplined and stay within that. You might miss a Palantir, but again, it's not like we're missing high flying growing companies. Palantir was up, 130%? Well, we stuck with a company. I mean, we recommended Group Dynamite last year. It traded then at 10 to 12 times earnings, and it went up about 450, 550%, depending on when you purchased it. So absolutely crushed this company, but you got it with a better margin of safety. Mm-hmm. So
and exactly,
I like to prove that point or make that point too as well. By being and staying within your box, that doesn't mean you're going to miss extreme growth companies. You can hit them. They just have to be, you're hitting like a batter. You want it to come down, and if you see a sweet pitch on a company like that, if GRGD flies at us again or its equivalent, we will hit that and hopefully hit it out of the park. But you don't have to sacrifice returns either, is what I'm saying, by hitting in the sweet spot.
Mm-hmm. The short here too on the short, or
Brett's like, can I just get to my? No, I'm just kidding. It's my fault. I keep going.
No, I want you guys to rag on me. Come on.
No. Well, no, it reminds me of my, like, I think in 2023 and 2024 I did a short prediction on Tesla, and even in 2024 I couldn't have been more right that revenues were slowing, growth was slowing, margins were coming down as well significantly. But yet, the stock continued to just soar higher. Like, fundamentally, I thought that, the company was worse off. But, these businesses that just are trading, nowhere near their fundamentals realistically, or at astronomical, valuations. It's tough to go against them. You just never know how high the market will continue to take them.
Yeah, when you need to justify a valuation for something 5, 10, 20 years out, it's just something with really no margin of safety. It is very speculative, and like Ryan was saying, it just doesn't have margin of safety, and we prefer really to play on the other side of the market where we do actually have margin of safety. So this one was correct. Unfortunately, SIBO actually did remove their volatility index or realized volatility index during the year, but prediction was volatility will be higher in 2025 than 2024. They previously had a realized volatility index. I just did the rough numbers, but even if you were just participating in the market, volatility was higher this year. Even if you weren't even going to look at the numeric numbers, the prediction was higher than 14% using their index. It would have been about 22.6% just through my calculations. So obviously significantly higher throughout the year. It doesn't surprise if you were looking at any of the tariff effects during the first and second quarter of the year, and then just the general geopolitical uncertainty throughout the year. In the S&P 500, this is. So I'm not surprised this one was correct. I think it was the most likely out of my predictions to come true.
Yeah. No, it was a good one. Definitely right.
All right. And moving on to my last one. And this one, I'll let you guys really decide. Bitcoin will set a new all-time high during the year, which it did. It was the high at the time was 108.4 thousand. And I changed that to actually exceed 130K or hit 130K, which it did not hit. That 130K was high, was about 126,000. But and as well, on top of that, end the year below 100K, which it did. So it's whether or not you want to hold me to that pinpoint of 130K or not. Very close for Bitcoin. I'm taking this to win regardless.
A half to 3/4 for sure, right?
I would give him a full, honestly. Okay. Like that was
Brennan's, too nice. I'm just kidding. Well, that's good. No, I agree.
It
basically directionally, you're totally correct. So I can be on board with that.
Yeah, exactly. Like, I mean, you gave very specific numbers, but I mean, you were very close to.
Yeah, I remember even telling you before the show that I was humming and hawing between 120 and 130K. So really right in the ballpark. Even if you don't mark it right, I'm taking this one as a win.
Yeah.
So,
I gotta say, gentlemen, we as a group, we did pretty well in our predictions.
This is, I think, the best year since I've been around.
It's tremendous. But I gotta say, I won.
Yeah, you did. So.
That's all. After
that's
all
it cares about.
Done, yeah. No, that's great. Like it's, I think they're always fun to do some predictions. We wouldn't put a lot of stock in predictions. Predictions often, we there's a couple micro predictions in there on individual, but we're focused on the micro around individual companies. Obviously, you got to take into account the macro, but we can control that more. And so it's just fun to do these predictions, but we would prefer to just make our individual predictions on individual companies. And so I'm going to start off my predictions for 2026, kind of in that vein. My predictions for 2026, my prediction here is simple. Keystone's top infrastructure-related small cap will post a greater than 25% gain from its buy price by the end of 2025. The specific prediction here, while we cannot, out of respect for our clients, we cannot reveal the name of the stock as it was just recommended to clients in the last month, but I will tease it. They will definitely know, and the guys know and will hold me to this company. Spec buy on this company. At the time, its shares traded at about 8 times trailing 12 months earnings, about 4.9 times our fiscal year 2026 earnings. It was around $8 then. We think fair value is 11 to 12. This could be increased with quarterly execution by the company. That is my first prediction, and it is definitely a teaser, and that is a little more micro than some of the macro predictions we've made in the past. Prediction number 2, this is more general. I said quality small caps will outperform the S&P 500 in 2026. So the specific prediction here would be the S&P small cap 600 will outperform the S&P 500 in 2026. I do have some questions and reservations about this, and I'll talk to that in a second. But let's just look at the S&P 500, the Russell 2000, the S&P Small Cap 600 annual returns over the past 10 years, 2016 to 2025. As we can see, other than that first year there, 2016, there was significant outperformance over the past decade from large cap companies. We can look at the cumulative returns here. The S&P 500 large caps, 290% cumulative over the period. Russell 2000, 150. The small cap 600, a little more value-oriented companies outperformed the Russell 2000, but not by a wide margin. Like I said, to be frank, I don't have a high conviction on this, not because I do not see relative value. I do see relative value in small and mid caps versus large caps through 2026. I just do not have the faith that the constituents of the S&P small cap 600 or certainly the Russell 2000 small cap indexes will actually outperform. I do think Keystone can select companies within those small cap indices, that will outperform. Yes, I do think that, but there is a lot of crap alongside those companies, particularly in the Russell 2000, but also in the small cap 600. That there's no real index that tracks really high quality small and mid cap stocks. So if the economy gets the sniffles in 2026, and we could definitely see that, small caps broadly tend to underperform significantly and are broadly more sensitive. So individual stocks, we're going to see value. I think we can still find those. The first stock that I talked about, that I teased above, you can see the valuations relative to the market, relative to its segment. You can find some anomalies. Do I think the broader small cap index is definitely going to outperform if the economy weakens? That would be tough. That's going to take through my really significant predictions. I'm predicting there will be a memification of the Fed. Fed Chair Jerome Powell, in an attempt to reach Gen Alpha investors, will deliver the June FOMC statement entirely in brain rot slang. I believe that. I firmly believe that. This will be part of his statement. He will say the vibes are mid. So we're straying phantom tax on the interest rates to keep the economy from losing its aura. No cap. The market will rally 4% simply because nobody understands what he said. And uncertainty is interpreted as bullish in this one occasion. So that is a very bold prediction that I make.
That is.
Memification of the Fed. Powell will definitely deliver one of the FOMC statements entirely in brain rot slang. I was helped on this by my 10-year-old daughter, clearly. The final prediction I'm going to make here is that Katy Perry finally figures out that she is vastly more intelligent, which isn't saying much, than Trudeau, and dumps him and the twist here is she will dump him for U.S. Representative for Colorado, Lauren Boebert, who coincidentally, Katy Perry, throughout the year, this is going to happen too. Katy Perry's own song, her hit song, I Kissed a Girl, will see a revival topping the charts in 2026. So that is my two main predictions right at the end there. Here is from our disclosures. You got to read our disclosures there as well. We have. All right, that ends it. Thank you very much.
You're gonna get a phone call from Trudeau tonight.
It's true.
What happened to SpongeBob?
What happened to him?
Yeah.
What do you mean?
Where'd he go?
I don't know. Was he not in there?
Well, he was.
My predictions on SpongeBob.
He was there in
Isn't there? When did the
2025?
SpongeBob movie come out? Is it this year or next year, or was it 2 years ago? Wasn't there a movie for
not sure.
SpongeBob coming out, or it's maybe this year? I'm going to predict it comes out this year. I'm going to look that up as I predict it.
Yeah, I bet. Yeah, one thing too that I just
It comes out in 2024. That's my prediction.
You know, I do like the. You know, I'm trying to talk real business here, but you know, I do like
Stop
the
that.
infrastructure. I mean, obviously, you know, regarding that, you know, one stock, one investment that you didn't, you know, indicate the actual name of, but you know, generally speaking, I do believe, infrastructure should have a relatively good year as well in 2026.
Yeah, and the spend might not come for 2 to 3 years from now. There's typically a lot of talk about it, and then the spend comes out, then it filters through. But that company trades at relatively attractive valuations. If we see an uptick in backlog in that business, if we see the new acquisitions start to massage margins higher, there is spending throughout the year that the company's going to be ramping up. So there could be some noise in the numbers, but we think, again, it is on the higher risk end of our coverage universe, but it offers reasonable value right now. So we're looking at it over the course of the next 1 to 3 years plus. Okay.
I'll get into mine here.
Yeah. Where did SpongeBob go is the question.
Where did SpongeBob go? Okay. So my 2026 predictions here. Now, up on the screen here is this table from Canadian Mortgage Trends is a bit dated, as National Bank is now projecting 2.75% at the end of the year rather than 2.5%, as they believe structural inflation will be higher and force a slowdown in the second half of fiscal year 2026. But I am projecting that the Bank of Canada target rate will end up below 2.25%, which is a little bit of, an outlier compared to most of the banks, but it is in line with BMO's target of around 2%. And this is based on my assumption that there is more structural weakness from Canada's productivity, while employment numbers remain weak as firms continue to delay hiring and expansion until the 2026 USMCA review is settled. Furthermore, there will be a significant mortgage payment shock in the year for homeowners who locked in record low rates in 2021. So this is pretty bold, a lot more bold than the Russia-Ukraine war ending in 24 hours. Now, my next one here is gold drillers will have a positive year, leading most, if not all, Canadian listed drillers higher throughout the year. So I'm looking for at least half of these, or more than half, I guess 3 out of 4, let's say, to end the year higher. And this is based on of course, number one, record price of gold in late 2025 and early 2026, reaching $4,600 per ounce. That's US dollars, $4,600 per ounce today, as well as data showing year-to-date global gold financings. This is in 2025, reaching a new all-time record month of money raised in September 2025 of 1.2 billion. Now, typically as well, there is a 6-month to a year lag from these gold miners and exploration companies getting cashed up to deploying the capital into the sector. So while mobilization and inflation may be reducing earnings near term, I believe that they should accelerate earnings throughout the end of the year, which will lead their prices higher. Now, my next one,
bold, Brennan, bold. I like
pretty
it.
bold.
Nice job.
Pretty bold.
No, honestly, capital should flow in, but it can be delayed in the near term. Some of those may face some, and they have utilized, as they ramp up, they typically have higher costs, but at some point you would think money would flow there for sure.
Exactly. Now, my next one here, as Ryan said, I decided to do a stock pick for the year, which is VersaBank, VBNK on the TSX, as well as the NASDAQ. And I believe that it will end the year above $21.40 per share. That's Canadian, which is its current trading price today. Now, this is a company which we have had under coverage since our initial recommendation in 2018 at about $7 per share Canadian. But we were aggressively recommending clients add to their positions in 2023 in the sub $10 range, and again indicating to clients that they could buy on weakness in 2025 in the $14 to $15 range. So, I'm not going to go through the full thesis and our fair value targets, as we just published an update report for clients last week. But just a couple of things that I will note here is that I expect strong operating leverage to continue to take hold in the US throughout the year, as well as for earnings per share. It is expected to sequentially improve throughout the year. Now, keep in mind as well, we're looking to hold this company longer term than just a year. We'll see what happens, over the year. Again, I do project that it is going to be a good year for the company. But again, this is we're not looking to hold stocks for a year generally, unless it is a very specific case. But that's quite rare. We are long-term buy and hold investors, especially as a company continues to execute and grow earnings long-term. That is what drives a share price higher. And my more for fun one, and just because I'm sure that people on that or listeners, just want me to shut up about buying a house already. In 2026, I will buy a home. And this is a horrible AI version of me and my girlfriend in front of a house in the summertime wearing winter jackets, because that's what we need to do in Saskatchewan. And here's my disclosures.
Nice
The
picture
AI.
there. Really nice picture, Brennan.
I thought it was pretty good.
That's the only thing you could pull up there.
Is it
You
the
and
same girlfriend
Parkas.
you showed in 2025 prediction, Brennan, or different one?
Yes, it
Strange
was.
how she looks different. I can't make AI to make it look the same. I don't know.
I couldn't. You're right. I mean, that's exactly how I sound right now, because I put in multiple pictures of us. I was like, make it look more like us. But it was having trouble with her, so she'll just be kind of
Even AI knows the house isn't happening.
yeah. And that I don't have a girlfriend, right?
Your relationship is a house of cards. Let's be honest.
Yeah.
There you go. Okay, we're gonna move on to Brett's famous 2026 predictions.
2026. Can I claw back from Ryan?
So
first one for the year. Silver will have a blow off top in 2026. I don't know how high silvers go. It's really had the best year in I don't know how many decades now. Ryan would have to tell me.
Yeah, I mean this is historic gains for silver, and yeah, I mean it's probably a good prediction that we have some kind of pullback.
Yeah, and I think it's going to have blow off top, no idea how high, and it'll decline at least 25% if it does come true, and it really does have blow off top. It could go quite a bit lower than 25% from its high.
Yeah, the 25% may happen in a day.
It could happen in a day. It could be,
like
you can just see in the last really couple of months how much it's increased in this 5-year chart I have up, how it really was flat for however many years you want to look back period. Now it's just gone really parabolic at this point. So moving on to my next one, Canadian, and I'm just going to do large caps here, just easy in Texas to track, will outperform the US. They did in 2024, even though you've seen probably headlines how well the S&P 500 has performed in 2025. It actually underperformed many of the world's indexes, especially if you do take into comparison the weakening of the US dollar if you were an international investor. And I think that's going to happen again in 2026. Canadian equities will perform, but likely to a lesser extent. I'm not going to add that to really my formal prediction, but I would say I don't think we're going to see the same spread that we did in 2025, as we've seen the Canadian banks, which do make a large component of the index, come up in value, and that it is already trading at higher valuations. Whereas the US, it has been trading at higher valuations for really multiple years at this point, and that's why I can't see it really keeping up steam when external to the US really hasn't had that same hyperbolic expansion that you saw throughout really the late 2010s and early 2020s. So moving on. This one is why I couldn't comment on Brennan's before. I think the Canadian policy rate is going to stay flat at 2.25%. I think the Canadian government or the central bank with the Canadian government renegotiating CUSMA, CUSMA, they're not going to know what to do. I think we're going to have that same we need to wait and see rhetoric from the central banks when you do see, because I'm going to assume that there's going to be very high headline geopolitical between US, Canada, and Mexico negotiations through the second quarter of the year. We're going to have a wait and see. And then if I am wrong, it will happen. Likely a cut will be in the second half of the year, but I'm going to go with it is going to stay flat throughout the entire year.
No, I almost said exactly that, either stay flat or, decline. But I really put myself out there. So
Well,
yeah.
we're not getting 100, both me and you, this next year.
No, exactly.
It's a guarantee. I predict
Yeah.
that. One of you will be wrong. That's my last prediction.
Somehow we're both going to be
Yes,
right, and just so you can be wrong. And then my last
Great.
prediction, number 4, rounding out the year, is I think Alphabet will become the largest company by market cap by the end of the year. Right now, it just hit 4 trillion. It doesn't show it on this table today. And Nvidia, it has come off its all-time high. It did hit a $5 trillion in, I think it was the end of October. But I think Google is going to eclipse Nvidia this year and take a spot as the biggest company in the world. I think I don't think Nvidia is necessarily going to do bad. I just think Google is going to outperform relatively to Nvidia. And even if you want to throw in Apple and Microsoft, because they are still all in the same ballpark, but then there is a step down to Amazon. So it's really that top 4 is all in the same group at this time. And I think Apple and Microsoft really can't perform as well as Alphabet as well. So Alphabet going to be the biggest company. You heard it here first.
And that is it's kind of music to our ears, in that this past year when Alphabet, everybody was on Alphabet for losing the AI race, and the stock sunk down to $150 to $160 range. We did a webinar. It ended up being from that segment, the Mag 7, our top pick from that segment, and the share price is absolutely destroyed all the Mag 7 over the course of the past year. And it's crazy, not crazy. It's always interesting kind of to see how the narrative is flipped on them being a loser to being a winner, in the AI race. And whether that in our last webinar, we talked about, we don't think it's like a zero-sum game. There can be many winners too. So I don't think you have to have a winner. And now Microsoft's a loser because they're invested in OpenAI. OpenAI is still the leader. So I think there can be many winners. That was kind of more our takeaway. But buying Alphabet in this past year, you could buy it at like 16 times forward earnings. Well below what the entire S&P 500 was trading at. So, that was an opportunity for sure.
Exactly. No, and it has come up in valuation, but I do think there is a bit more of that euphoria around.
Well, I think there's a ton of euphoria right now, and it usually goes. This is how the human beings go, and then they go extreme that way, right? And then extreme back the other.
That's exactly what I'm thinking here.
Pendulum is never sitting right there, and that's what you can. At some point, it probably will. It can. So it's a reasonable prediction for sure. All right, that ends our 3 predictions. We're gonna bring in Rahil, and he's gonna make his 3 very bold predictions that he needs to get 3 out of 3, or else.
Well, it's gonna be it's gonna be difficult to beat Sir Ryan.
Yes, thank you
next
for that.
year. So let's see.
And we welcome you to the podcast. It's great to see you and hear you on here, and I'm sure we'll be having you on throughout the year. So it'd be great to see.
Yeah,
it's great to just have you here. Yeah, awesome. We are too.
Awesome.
Good.
So here are my 3 top industries for 2026 that everyone is sleeping on right now. Just kidding. Number 1 would be top REITs. After 2 tough years of underperforming the market, they are primed for a strong comeback. Many REITs such as ZRE, the BMO Equal Weight REITs Index, is trading at a deep discount, offering juicy dividend yields around 4% to 6%, with plenty of upside as interest rates stabilize and confidence returns. My number 2 would be software pick for 2026. Last year, AI tools behind the scenes did great, but everyday business apps took a beating despite continuing to grow. As a result, many high-quality software names are now trading at bargain prices. I believe capital will eventually flow to companies with real cash flow and durable growth. And the iShares Information Technology ETF XIT.to offers a balanced way to participate through leaders like Constellation Software and Shopify. Healthcare would be my third pick for 2026. The sector underperformed in 2025, staying flat while market rallied. largely due to concerns around drug pricing and policy uncertainty. Looking ahead, I see earnings growth of 9% to 15%, higher than last year, with valuation sitting near 10-year lows, leaving room for 10 to 15% upside. Um, an aging population and AI-driven productivity gains could act as a long-term tailwinds. And the XHC Global Healthcare ETF, which tracks the S&P Global 1200 healthcare companies, provides broad exposure to global healthcare leaders. So that is it from my end. Let's see how the
Mhm.
2026 plays out.
Yeah, for
Yeah.
sure. I mean, I think the tech prediction there is interesting because I mean, you did see a decline, and part of the declines have come from just fear of AI potentially impacting the way software is developed, the way that these
Mm,
companies have a moat around them. We call them a moat. Sometimes that's used to use loosely, but yeah, and fear. And now there is definitely a threat, but fear is often, if you can find good companies that continue to execute, fear is your time to buy. I mean, that we just referenced Alphabet. There was a ton of fear surrounding it then, but it's a tremendously strong company. And, it can flip fast in the other direction, as we saw with that. So if the fears that AI is going to disrupt software suddenly are allayed in some degree, there's some companies that, and we're looking at large and small, that certainly could have some upside over the course of 2025 and going forward because they're trading at lower valuations than, say, their last 3 years average. So that's always a good indicator when you're comparing to peers. Are you trading at lower valuations, and or compare the peer group to its historical multiples as well? Are you trading below? The healthcare as well. I mean, healthcare has, like, the MSCI US healthcare index, I think its 5 year return is like 7% or something like that. So
mm,
it is certainly underperformed. And there's been fear there of payer cuts in the US. But there are some good solid companies certainly in there that are still growing and probably deserve higher multiples. And again, that's something, whether it happens this year or not, if you're buying good solid healthcare related companies that are growing, there's probably a time in the next 1 to 3 years where you see the market says, wait, either these are too cheap, or just says, these fears haven't come to fruition. So the fears are become noise, and then you have a move up. So, I mean, those are interesting sectors to pick to outperform for sure.
Yeah.
Yeah,
I think that
and
there might be a bit of a flight to safety as well. Go on, Brent.
Which
I
which
cut you off.
benefits healthcare. Yeah.
Yeah,
yeah,
exactly.
no. I was just going to mention the REITs are quite interesting because I would say they were still seeing a bit of whiplash from post COVID,
Yeah.
especially in like the office segment. The REITs there are very cheap right now, justifiably so because you're seeing low occupancy, you're seeing lower um, payments through them. And yeah, it's quite interesting. And you're seeing then on the other hand, you're seeing industrial REITs. If we do see an industrial build out, you're going to need the buildings for it. You're going to need the land for it. The industrial REIT should benefit in that sense. So you are seeing even just within REITs themselves, what sector of real estate will perform well. Like I was saying, office, if you do start to see them start to fill out some occupancy, you see it come back. And then even multifamily homes, we saw in this last year, rents in Toronto and Vancouver, the two really expensive cities in Canada, they were seeing weakness in comparison to Calgary and other cities. So do you start to see these dynamics play out and overall benefit REITs as a whole, as it really has been quite a poor scenario for the last 3 years for REITs as a whole? If you're just looking more generically, I would not be surprised if there is a quite strong year with REITs now that interest rates in Canada have more or less flatlined, but or if you're taking Brennan's side, go further lower, and in the US, likely going quite a bit lower.
Yeah, I mean, on the S&P TSX Capped REIT Index, the 3 year returns, price return, not total return, price return is negative. The 5 year is basically flat. So, I mean, there is potentially some pent up returns there after, price returns that were not so solid over the past 3 to 5
mhm.
years, particularly the past 3 years.
Yeah. Yeah. And then, like, just last thing, going back to like the software and just kind of like AI threats. I mean, again, there's some real threats. Look at Adobe. It's a company that we've always looked at. It's quite attractive. But AI there's a lot of like low cost players that have all of a sudden came in that allow people to, make images like, from Photoshop and whatnot, along those lines. That is a real threat. But, there's also the opportunity for, some of these players to utilize AI as well. So, I think that that is going to be interesting, especially if we see, those fears kind of go away.
Yeah, one of the things we're looking for is somebody who's utilizing and becoming more profitable by utilizing AIs, particularly in the software realm. Because if you could find that and identify that when you see some depressed prices, that could be a powerful driver of future gains. And then you can really have not only go from okay, well, this deserves a growth multiple, but then the narrative could flip. How much are we willing to pay? We might be willing to pay more now. So you get a re-rating the multiple. So those two things happening at once: growth in the underlying earnings and then a re-rating on the multiple. Anytime you get that, you have a powerful move in the stock. And that, again, I keep referencing back to Alphabet, but that's what happened there. Like we don't want to pay this. Oh, look at the growth is still there. And then, oh, now we all want this. So let's give it a premium multiple versus that's how you get 100% plus move in like a 6-month period.
Yeah. And then another one, which I covered recently, is your stock take Constellation. It's been hammered, and even the baby constellations, it's premium stock for the longest time, and it's now declined 25-30% over the past 6 months as those AI fears. And do we see that flip? Because they haven't seen their fundamentals, but do we see the narrative switch where, they can actually scoop up these smaller AI players into cash flowing machines like they've done with previous software companies?
Yeah. I mean, I think there could be an interesting opportunity with Constellation. We are looking at it. It's the issue was it did trade at massive premium valuations, and the other part is its founder has stepped away for health reasons. So it kind of, those two things with the AI fears hit at the same time. But like on a forward adjusted basis, I think you're looking at like around 25 times approximately this year's earnings. Now that is adjusted earnings, right? But that is a significant discount to what they have done over the past 5 years. So it is interesting from that perspective. But you do have those two kind of threats sitting there. One of them may be existential. I mean, the founder potentially not being there. I mean, we believe there's a good team there as well, but it does take a little juice out of the equation. I mean, he's always said biggest part of his mode is his Rolodex and his phone. So he goes and phones out, right? So, and that's intellectual capital that he's using. So he said that is my moat. Saying that there isn't much of a moat, but saying that that's what provides him a moat, and both in the same sentence. But interesting that you take that out of the equation. Certainly, he was the architect of the company. Now he has other people that hopefully he's passed on the formula that he's using, the vertical software and all integration. But I believe if you're looking historically, buying good companies when they come on sale, I mean, as a general rule, is a good rule. I wished that they were, I wish Constellation was trading at what they are now, and then you had a 40%, 30% decline, and then, you have more of a margin of safety. But again, it's historically when this company has had a move down, a correction, it hasn't had many corrections of this magnitude, but when it does, it's been a buying opportunity. So we're certainly looking at it. Is that going to end off our show? I think it was a great prediction show to start 2026, particularly because I won, and that is the only reason, really. Let's be honest. Otherwise, I wouldn't even have shown up if my prediction. And next, I'm not as confident in my predictions this year. You know why? Because we are all right now, I think, writing reports for some new research that comes out. So we're not focusing on our macro; we're focusing on the micro for our clients. But happy to do the show. Happy to talk what's going on in the markets over the course of this year. But as I say, keep your questions coming into Your Stock Our Take segment. We can then mug you for those really great Your Stock Our Take questions. This is a massive mug. You can carry your entire soup, lunch, or something in there as well, I think. Maybe Brennan's head can fit in there. But all right. But keep them coming in, and we'll mug everybody during the year. And if you're, like I say, if you're watching this right now on YouTube, smash that subscribe button. If you're listening to this, wherever you consume your podcast, rate and review us. And as always, I wish you profitable investing. Thank you.
Thanks, everyone.
Thanks.
Thank you.